Netflix, third quarter 2025 earnings call, the closing bell, and much more. Hey up everyone, welcome to Martyn Lucas Investor. I'm Vas. Thank you for joining thank you for everyone for joining today's Martyn Lucas Monday marathon. But it wasn't Monday, it was on Tuesday. But amazing job by Sensei. Thank you very much for joining. I'm taking over the relay and we'll be continuing. So we have a closing bell in a few minutes. Again, Sensei, amazing job. I don't know how you could do it. 8 hours live. Martyn would be struggling. I don't think Martyn's ever done 8 hours. Do you think Martyn's ever done 8 hours? Let me know in the chat. Let's wind Martyn up a bit, because when he's gonna check in the chat, he's gonna see. Put in the chat, Martyn's never done 8-hour stream. Thanks, Sensei. Just pop it in the chat, just to wind Martyn up a bit. But yeah, amazing job by Sensei. So what the markets have been doing. Today has been a bit up and down, or respectively down and up day. We had some reaction towards down, and now we are sort of level with the S&P, Nasdaq. Bitcoin is slightly up, XRP not doing much, Ethereum slightly up, and gold and silver profit taking. Well, Martyn is here. Martyn is here. What did I talk about a minute ago? Do me a favor. Yeah, thank you. I can see the messages coming through. So silver and gold, we had some profit taking. Sensei talked about it before, so you know the story. Those who followed Sensei on the previous stream. We are now waiting for the closing bell, and we will be coming to Netflix earnings call. Well, what is going on with Netflix, and why Netflix? Because Netflix is very reactive. Historically, Netflix always reacts massively, either upside or to the either upwards or downwards. So with Netflix, I thought this could be a great opportunity. It's also indicator of a customer sort of index, customer price index. It's not the actual customer price index, but it's showing us because it's entertainment. And if people have money, they are spending money for entertainment. If people don't have money, what is the first thing you're going to cut off? Well, obviously, entertainment. People will not be spending less for food. People will not be spending less for cigarettes and alcohol. People always will be spending less to go out in pubs. They will start drinking and eating at home, and they'll be spending less for traveling and entertainment, like Netflix. So if you look at Netflix subscription, it's currently what? I don't know what is it in the USA, but in United Kingdom it's about $16-18. Your basic subscription. So that would be probably my first cost, because I've got loads of subscriptions. I've got Disney, I've got Netflix, I've got Sky TV, I've got Amazon Prime. So all these, I've got Spotify as well. So this all makes up to almost 100 quid a month. So yeah, if I start being short on money, I will start cutting down these subscriptions. So if Netflix is doing well, we can see there's a lot of optimism in the market amongst the people. There's a lot of money in the market and amongst the people as well. So let's see what this is going to bring us. So far, the earnings season has been successful. Banks, fair upside. We are kicking off with the Mag 7 tomorrow, hopefully. We are doing Tesla. If somebody requests it, we might be doing Tesla. And then next week, actually, speaking of earnings, I will show you. I know Sensei showed you recently, but I will show you. This week we have Tesla, we have IBM tomorrow. I know somebody requested what was it? Ole. Thank you. Who was it? I don't remember. Alex T. Thank you for requesting Netflix today. We can have this show because of you. So thank you very much for your super chat. Tomorrow we have Tesla. We have Ole. Ole is already booked in. But shall we lock in Tesla? Could be great indicator of the Mag 7 and the S&P, what that is going to do. Tomorrow, I would love to do Ford, actually. I've never done Ford earnings, but I've got on my Thursday. I've got on my shortlist Intel as well. Up to you, whichever you want. Friday, there's only morning sessions. And then the following week will be jam-packed. And will be dictating and will be telling where the S&P will be going and how it will be reacting. We have Enphase on Tuesday, EA Sports, Visa, and then on Wednesday after hours, big day. We've got Microsoft, we got Meta, and we've got Google. Thursday, even bigger day. We've got Amazon, Apple, Coinbase, MicroStrategy. So whoever wants to cover their earnings, I don't have any preference. I don't even know what I'm going to do. So whoever requests their earnings first, you got it locked in. There's not much time left. It's next Wednesday and next Thursday. These jam-packed 2 days. Microsoft, Meta, Google, Starbucks as well on Wednesday after hours. And Thursday, Amazon, Apple, Coinbase, MicroStrategy. We have somebody brave investing in Reddit. We have any bros trading Reddit. You can request Reddit. You can request more, but these are the main ones, the main highlights. So Netflix, we are waiting for the closing bell, which is about 5 minutes away. What the markets have been doing. Markets are flat. Markets are flat currently. No massive upside, no massive downside, apart from Bitcoin, 1.2% up. The S&P is stagnating. What has the eVTOL market been doing? Well, we've got Archer down, Joby down, Vertical Aerospace consolidating just around the support 480, between 5 and 480. EHang is the only up, but it's only 0.22%. Hover, Horizon Aircraft, big retraction. On Horizon Aircraft, tomorrow we are bringing you exclusive content. We are bringing you Horizon Aircraft in their presentation on the Microplanet, which is a microcap conference. It'll be a very interesting presentation, and we should hear some updates from Brandon Robinson as well. So that will be tomorrow. I will keep you updated on the time. We shouldn't be clashing with anything. So I'll keep you posted on the time. Definitely exclusive content. Nobody else is covering this. And I've just got a notification from Horizon Aircraft themselves not to miss this event. So there might be a reason for that. But Horizon Aircraft, slight sell-off. We are now at 272. I will have a look at the charts after the closing bell. Bear with me. I just want to quickly go through this and not to miss it. And then we have Air Mobility 147 minus on the day. Right. So what the S&P has been doing and what Netflix has been doing. Well, Netflix has been doing very, very well. As I said, the recovery from the carry trade, where Netflix hit the this is the right screen, when Netflix hit its low around $370. Now we had a massive rally, massive upside recently, and today, let me just zoom out a bit and get this bigger. I don't know why it keeps doing this. Why there's not like default setting? Well, it might be a default setting, but we had a big sell-off on Thursday. Obviously, the macroeconomy not headwinds, but a little rattle on the market. We had a sell-off continuing to Friday pre-market, and on the back of the earnings, we had a massive, nice upside. We had a ride from Monday all the way to today. We had 3.36% rally. That's not bad, is it? That's not bad. So what are we expecting? Let me know in the chat. I will ring the closing bell. I don't know how I'm gonna ring the closing bell. I don't have a bell because I never do closing bells. I don't have a bell. Okay, I need to get my own bell. And the S&P. Oh, S&P looks like it's selling off. Is it selling off? Is it not? Interesting. S&P is going down slowly but surely. What are we doing here on the daily? Oh yeah, S&P is now negative. It's 0.01, but it's negative on the day. Nasdaq negative 0.5. Bitcoin still up, holding. XRP around. XRP is flat. Ethereum 0.61 up, and gold and silver keeps these lower levels, and it's actually going down as well. Wow, that's interesting. So let me know in the chat, and I'll talk to you very shortly. Oh, it's coming down. It's coming down. Slowly but steadily. Slowly but steadily. Interesting. Right, we have the bell in 10 seconds. You're not gonna hear it exactly because my stream is delayed for various reasons and for YouTube reasons, and the latency is there. But 5, 4, 3, 2, 1. Ding 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 ding. Don't laugh. It's not funny. It's actually embarrassing. Okay. So what is the S&P doing? We had a slight bounce off, but we are still negative. We are still down. Nasdaq. We can see the chart. We are still down. What the Netflix is doing? We are waiting for the results. Nothing has come out yet. I'm waiting. I'm looking out for the numbers. Bear with me. Nasdaq still down. Bitcoin, no major move. XRP about flat. Ethereum slight retraction because we were plus 0.7. Now we are slightly lower. Gold and silver. Silver keeps coming down. Silver keeps pushing down. Do you want to see the chart? Let's have a look at the chart. Well, I will bring you the chart. Trading view, and let's have a look at gold. Gold, what has the gold chart been saying? Right, that is gold as of today. Let me just zoom this out, bring this on the screen. That is gold as of today. Sensei told you about it. We hit the all-time high. Let me switch to this one. We hit the all-time high, and now we have profit taking. Netflix dump. Somebody says Netflix dump. Well, I don't see. Oh yeah, the numbers are out. Okay, well, let's have a look at the numbers. The S&P is going down as well. I'm not saying it's on the back of Netflix, but let's have a look. Let's have a look at the numbers, if we have access to it yet or not. Investors, third quarter earnings. Do we have? Yes, we do have the letter to shareholders, and we have the financial statement as well. Those who just joined, we are covering. Just cover the closing bell. You are watching Martyn Lucas Investor. You are watching like 12th hour of the Monday's marathon, which is actually taking part on Tuesday. But I think the alliteration with MM would work out quite well. It's quite catchy, isn't it? Martyn Lucas Monday Marathon. Ooh, that's mighty. You know, if I said Martyn Lucas Tuesday Marathon, it's a bit mediocre, isn't it? So welcome to Martyn Lucas Monday Marathon, taking part on Tuesday. We are now covering earnings call for the third quarter of 2025 of Netflix. We have the numbers out, and the reaction has been quite big. Where are we with Netflix? There it is, the reaction. Oh, we are crushing quite badly. So let's have a look at the numbers. What do you think? Financial statement and letter to shareholders. So what are we going to go through first? Do you want to see? Right, let's have a look at the shareholders letter. October the 1st, 2025, fellow shareholders, revenue in third quarter grew 17%, in line with our forecast. Operating margin of 28% was below our guidance of 31.5% due to an expense related to an ongoing dispute with Brazilian tax authorities that was not in our forecast. Absent this expense, we would have exceeded our third quarter 25 operating margin forecast. We don't expect this matter to have a material impact on the future results. Well, it's definitely having an impact on the stock chart. If we have a look, we are coming even lower. Wow, that's just going down. That's a free fall. That might be a good trade for you. That might be a good trade for you in and out. This is not financial advice. I'm not saying anything. This can go down. This can go even lower on the guidance. So probably don't jump in. But if you are brave enough and if you believe the fundamentals are there, if you believe in Netflix, this might be good opportunity for you. Sometimes you can grab a good swing trade on the overreaction. You can see it's now coming back up. You've probably missed it now, so I wouldn't be chasing it now. So engagement. What's next? Engagement remains healthy. We hit our highest quarterly view share even in the US and UK, which has grown 15 and 22% respectively since fourth quarter 2022. That's a weird comparison, isn't it? According to Nielsen, like 2 and 3 quarters of a year. That's a weird one. According to Nielsen and Barb, in third quarter, we made further progress against our 2025 priorities. We deliver a great slate, including Wednesday, Season 2, Bon Appetit, Your Majesty, from South Korea, and Happy Gilmore 2, while K-pop Demon Hunters became our most popular film ever. No, I've not watched it. I've not seen it. Can anybody tell me, is that any good? K-pop Demon Hunters, is it any good? Do we have somebody who's seen it, who's watched it? Tell me, please. Shall I watch it tonight when I go to bed or not? K-pop Demon Hunters, please let me know. Is it a good show? Is it a good film, movie, whatever that is? Is it a good one or not? Because it says it's the most popular film ever. Wow, that must be good. We record our best ad sales quarter ever. That was the biggest expectation of this earnings call. Is the ad sales revenue going to explode, or is it going to pull Netflix down? Because they had some revision, they changed their strategy, and there was a lot of questions around it. We recorded our best ad sales quarter ever and doubled our commitment in the United States upfront. The Canelo versus Crawford boxing match became the most viewed men's championship fight this century. Wow, that's very, very bold and very impressive statement. We are finishing the year with good momentum and have an exciting fourth quarter slate, including the final season of Stranger Things, new season of The Diplomat, and Nobody Wants This, Guillermo del Toro's Frankenstein, Catherine Bigelow's House of Dynamite, Ryan Johnson's Wake Up Dead Man, Knives Out of Mystery, as well as more live events, including National Football League Christmas Day games and the Jake Paul versus Tank Davis boxing match. Interesting, very interesting. You can see we had slight recovery. From the initial overreaction. Don't try to trade it. It was late. You missed the bottom of the overreaction in here. Now it can go downwards as well as it can go up, but I would be surprised if we have a downwards reaction. So don't try to trade it now. You will more than likely lose your money, or you will more than likely end up with your funds locked in for a long time. Martin says Netflix is a bellwether big miss. This could be first sign of the upcoming crash. I'm waiting to buy. Yeah, I agree, Martin. I agree. As I said before, this is entertainment. People, first thing you are going to start cutting your costs, your daily costs will be entertainment, eating out, Netflix, nightclubs, cinema, you name it. What people, on the other hand, will be forever doing, will be probably forever, their priority, obviously, is eating. So eat. You're not going to be eating out. You'll be eating in. You will start cooking. Drinking. Obviously, alcohol market is massive. Sugar and soda beverage industry. That will be always there. People won't be saving on this. And smoking, tobacco industry. These 4 industries, people will never, ever saving money on them. They will always put it at front. So just a little handy tip for you. So what we've got in terms of numbers, let's have a look at the numbers. What caused the overreaction? We have some data, we have some numbers in millions, except per share data. The earnings call, the actual earnings call is starting in about 35 minutes. Bear with me, I have the show open, I have it ready on standby. We will have a visual show as well. I mean, it's Netflix. They wouldn't be doing a radio show, would they? So the numbers, our summary results as forecast for fourth quarter are below. So the revenue is 11 million. Excuse me, 11. It's in millions, so it's 11.5 billion. Forecast for next quarter is up. Year-over-year growth 17.2%. Forecast 16.7 for next quarter. Operating income 3.248 billion. Forecast for the next quarter 2.860 billion. Operating margin 28.2%, and we can see slight decrease from the previous quarters. This could be one of the reasons. We had this overreaction. Well, what's next? Diluted earnings per share 5.87. Again, drop compared to the previous 2 massive quarters, and the guidance for fourth quarter is lower as well. So again, as Martin said, this could be shadowing something that might be coming on the whole market. Net cash provided by operating activities net cash provided by operating activities, we've got 2.423 billion. Previous quarter, and we are up, that is positive. We are 2.825 on this quarter. We don't have any forecast. Free cash flow 2.660 billion, upside from the previous quarter, and shares FD, we are almost level with the previous quarter. Third quarter results and forecast. Revenue in third quarter grew 17%. Pricing adjustment, driven primarily by membership growth, pricing adjustment, and increased ad revenue. Revenue was in line with our guidance, with a slight variance due to unfavorable movements in foreign currencies since we set our forecast. Third quarter 25 operating income totaled 3.2 billion, up 12% year over year. So we have some positive news, but we have a cool down compared to the previous massive 2 quarters. Operating margin was 28% versus 30% in third quarter. Well, we have the numbers broken down. We've been through this. As a reminder, the guidance we provide is our actual internal forecast at the time we report, and we strive for accuracy. Our primary financial metrics are revenue for growth and operating margin for profitability. Our goal is to sustain healthy revenue growth, expand operating margin, and deliver growing free cash flow. In fourth quarter 2025, we expect revenue growth of 17%, 16% on the FX neutral basis, driven by growth in members, pricing, and ad revenue. We project an operating margin of 23.9%, a 2 percentage point year-over-year improvement. So again, we are not so bad. This could have been an overreaction, but I would not be probably trading. I would not be trying to trade this. This can go either way. This can go up. This can go down as well. Let me get some tea. James is here. Yes, he likes me drinking tea. Thank you, James. And I see MF is saying Tesla next to miss. Do you think Tesla is going to miss? Well, let me know in the chat. Tesla, is it going to beat or is it going to miss? Content and engagement. At Netflix, our goal is both simple and ambitious: to entertain the world. We achieve this by offering diverse selection of series, films, and games that our members love. This in turn fuels engagement, and when people love what they watch and play, they stick around longer. It's called the retention. That's literally what you have been doing today, all day on Martyn Lucas Investor. You've been liking what you've been seeing and watching, all the reports, all the conferences, all the live interviews, all the Donald Trump speech, whatever was on today's busy schedule. Now we have good retention because we have over 200 people watching the Netflix earnings. I love you. Thank you very much. Please hit the like button. It will help promote. If we hit 100 likes, it will help promote this event, and YouTube will push it out. The more people we get in, we can have polls, we can talk to the others in the chat, and we can get better feel for the investor sentiment as well. So yes, you are doing us favor. You are helping, you are appreciating my work. You are appreciating Sensei's work as well, but it will help to promote this event, and it will gather more people in, and we can have better feel for the market sentiment and what we can see. I will close this poll shortly on Netflix, and I will open a new one. So that will start rolling in the sentiment. Where did I stop? Retention. Recommended Netflix to others, acquisition, and place a higher value of our service. So if you click the like button, YouTube is going to do acquisition because it is going to recommend this event to the others and the channel as well, and place higher value on our service. That's literally what you are doing by pressing the like button and subscribing. Thank you very much. Delivering on this promise, especially across more than 190 countries in which we operate, is a complex challenge that requires sharp focus, bold, creative choices, and a commitment to continuous improvement. So just a little bit like our channel as well. By working and partnering with the best talent from around the world, you could see Sensei, now you have me. Martyn is on holiday. That's it. We are so similar with Netflix, aren't we? We are slightly better. We achieve creative excellence across our broad slate. That's exactly, literally like if I was reading Martyn Lucas' description of the channel. Now I'm just joking, but thank you very much for joining me. Hit series in third quarter including returning season of Wednesday, My Life with Walter Boyce, Alice in Wonderland from Japan, and documentary series Amy Bradley is Missing, a new series like Untamed and The Hunting Wives. I'm not going to read through this. There's a lot of titles now. You can pause it, you can zoom in, you can have a look. If you are on your phone and you pinch the screen, you can sort of pinch out and it zooms in, and you can read all the titles. But I'm sure we have Netflix audience in here. We have some nice chart. We have Netflix share of TV time in US and in the United Kingdom. Very, very interesting. So we have, right, other is on top. So other, the green, that is Martyn Lucas Investor. Yeah, that's YouTube, streaming platforms, other. Then we have linear, we have all other streaming, and we have Netflix. And Netflix makes up around 8.6% as of this quarter in the United States, and 9.4% as of this quarter in the United Kingdom. So there's a slight uptrend, very steady but solid growth. Do we have any more info? Yeah, we have the boxing event. Oh, look at this. Right, so let me just read this out. We grow engagement by expanding the variety and quality of our programming, and we strive to deliver big breakthrough moments to bring people together in a world of fleeting consumer attention and audience fragmentation. We believe big events can attract mass audiences and differentially valuable. We believe big events that attract mass audiences are differentially valuable to our members and our business. For example, our live super middleweight championship bout between Terence Crawford and Canelo Alvarez attracted more than 41 million viewers, making it the most viewed men's championship boxing match this century. The event was #1 on Netflix in 30 countries and made the top 10 in 91 countries. Across Netflix's social channels, the fight generated over 950 million owned impressions, and Canelo Crawford was a top trending topics on X worldwide, trending #1 in the US, and appeared in the trending list in 21 other countries. Very, very interesting. There's some more info. You can zoom in, you can pause the screen, catch up with the stream. We are waiting for the actual call. The actual call will be starting in about 25 minutes. Bear with me. I will read through this. I will not be reading through this. You can pause this. You have some indication on returning seasons, new series, a big slate of films as well. Exciting live events preview and more kids and family programming. Okay, new stand-up comedy specials and new games as well. Speaking of Netflix, the last thing I watched on Netflix was Last One Laughing. Do I have anybody who's watched Last One Laughing? The UK version. Brilliant. Jimmy Carr and the bunch around Jimmy Carr, most of the stand-up and generic comedians from the UK. Basically, it's a Big Brother where they lock 10 entertainers and comedians together, and they are locked in the studio for 6 hours. They sort of live together, same as Big Brother, but the point is to make each other laugh, and they can't laugh. Whoever laughs, they are eliminated. And if you like Jimmy Carr and if you like British humor, brilliant. Let me know if somebody's watched it from the UK. Product and innovation, again, I will not be reading through it. You can pause this. You can zoom in. Monetization, that will be interesting. Let's go through the monetization, and I will go. We have slide recovery on the chart, and I will go through some more info. Monetization. We have come a long way in building our advertising business in less than 3 years. In that time, we have gone from 0 members on our ads plan to achieving sufficient sale in all 12 of our ad markets, and we will continue to grow from here. Building out our ad sales and operations teams and enhancing our capabilities for advertising, including launching of our own first-party ad tech stack, Netflix Ads Suite. Oh, so this might mean we will see more ads on Netflix as well. We have a solid foundation and are increasingly confident in the outlook of our ads business. We are now on track to more than double our ads revenue in 2025, still off a relatively small base. And we successfully concluded our US upfront with commitments more than doubling this year. With the Netflix ad suite fully deployed across all of our ads market for a full quarter, now we have greater opportunities for innovation like enhanced targeting for integrating additional demand sources. For instance, we recently announced we will integrate Amazon's DSP globally and AJA's DSP in Japan into our programmatic offering, with availability beginning in fourth quarter 2025. These efforts could help create a better, more relevant experience from our members and help advertisers drive even better results. Well, is this going to mean? Is this going to mean more customer focused and more customer tailored adverts, or is this going to mean more and more adverts in the end? No doubt we will hear that on the earnings call. Competition, I will not read through this. Again, you can pause it, you can zoom in, you can pinch your screen and get a view of this. Cash flow and capital structure. Net cash generating from operating activities in third quarter was 2.8 billion versus 2.3 billion in the prior year period. Free cash flow in third quarter totaled 2.7 billion versus 2.2 billion in third quarter 24. We now expect 2025 free cash flow of approximately 89 billion. No, 18. Sorry, can't read it. 9 billion plus minus a few $100 million. Yeah, just casually plus minus a few $100 million. Up from our prior forecast, 8 to 8.5 billion. This new forecast reflects the timing of cash payments and lower content spend. During the quarter, we repurchased 1.5 million shares for 1.9 billion, leaving 10.1 billion remaining under our existing share repurchase authorization. We ended the quarter with gross debt 14.5 billion and cash equivalents of 9.3 billion. For quick reference, our past investor letters can be found here. Okay, here are some numbers per region. So we have United States and Canada. There's the revenue growth year over year. 17% is massive. That is massive in this quarter. Europe, 18% year over year growth. That is good as well. Latin America, 10%. And Asia Pacific, 21% growth year over year. That's some solid numbers there. Neutral operating margin disclosure. Got operating expenses, operating profit. I'm not going to read through it because we've got more stuff to go through. What is the market doing? S&P is slightly selling off. We got Nasdaq slightly down. Bitcoin is retracting as well. XRP negative 0.7. Oh. Ethereum selling off. Gold and silver keeping the levels we had on the closing bell. What is Netflix doing? Netflix is consolidating. Again, don't try to trade it now. If you believe in the business, excuse me, if you believe in the business, you might have a good sale now. You might have a good entry point, but again, this can go up and down like a yo-yo. I would not be buying now. What we've got more? Do we have any more info? We've got some financials. I will show them during the earnings call. You can zoom. You can pause it now. You can zoom in. You can have some comparison. You can go through it yourselves. And do we have any more? Yes, we have consolidated balance sheet. Again, you can pause it, zoom in, have a look. And we have consolidated statements of cash flows. The earnings call, the actual event, should be starting in about 18 minutes. So stand by, and I'll be bringing this to you as soon as we start. Right, let's catch up with the chat. Who we've got here? Thank you very much for joining me, everyone. Don't forget to hit the like button on your way in and out. Ricardo Vasquez is here. Good afternoon, banana heads. I love it. First one here, as always. Great. And to James was second. Thank you. Please smash the like button on your way in. Thank you, James. Ninja Cowboy is here. Seth Houston. Ninja Cowboy, yeah, he's done 8 hours. Martyn is here from his holidays. Evening all. Ricardo. Martyn has done like 6-hour streams. Yeah, I agree. Martyn's never done 8-hour, has he? 8-hour event, has he? Martyn is like 6 stops, and then he has to walk off, and he has to go there, and he has to go there. I've never seen Sensei all day today. I've been in and out. I've never seen Sensei away from the screen all day today. So how about that? Ninja Cowboy, he's done longer. Sensei, Martyn could never. Yeah, I agree. Chris Carpenter, Martyn has never done an 8-hour chat. Yeah, I agree. Martyn's never done it. Exactly. James, Sensei is the new record holder for longest Martyn Lucas Investor live event, setting the standards for Martyn. Yeah, I love it. I love it. Dogstale is here, one of the newer members. Thank you for joining. This is by far the best channel on YouTube. Well, thank you very much. And I am happy you are enjoying our Martyn Lucas Monday Marathon happening on Tuesday. Thank you. HB4L, Martyn, your boys are making you look bad on streams. I love it. Yeah, give it to Martyn. Give it to Martyn. I love it. I love it. Chris Carpenter, Martyn is too old for that long. Now he's not. Don't say that. He's not. He will. Now he'll be proper upset. Ninja Cowboy, ain't that the truth? Sensei, he has done 24 hours, I think, but I'm happy to pretend I have the record. Yeah. Martyn has done much longer, but we are just trying to wind him up a bit because we know he's watching. James Vaz, why don't you do the longest live stream now and break the world record? I might do it as well, James. I don't know. I might do it as well. Well, there's one little catch. I need to stop. About 6 o'clock in the morning. So I need to stop. I would need to stop in 8 hours. Well, I could break Sensei's record because I need to go to work. So I might not do it. Might not be the best idea to do it today, but yeah, I will do some. Vas just volunteer 48 hours. Yeah, no. James, there should be 100 XRP prize for the Martyn Lucas presenter who does the longest. No doubt Martyn would have done like 26-hour live stream. I wouldn't be surprised. Ninja Cowboy, I will pitch in. James, he will too, right? Ninja Cowboy, Vertical Aerospace is on sale. Yes, I will have a look into that shortly. We are waiting for the earnings, the actual earnings presentation. We will have an actual video event. It's not gonna be just voice cast. It will be a proper, full-on Netflix production studio presentation. I mean, it's Netflix. They should be doing it properly, shouldn't they? So we are starting in about 15, 14, 13 minutes. We are starting in about 13 minutes. James saying, I'm still buying eVTOL stocks. By the way, I was going to go live with the story of the day, but there was literally nothing happening. Nothing happening, and I was rather focusing on this event, and I was supporting Sensei. From distance on his big marathon today. But I'll be back tomorrow with Horizon aircraft presentation from Toronto, and there will be much more coming. KC Vaz, do you think the cancel Netflix movement has impact on earnings? It could have, but it's happened. What it was last few weeks. I don't think that'll be reflected in that yet. I don't think they'll be reflecting in there yet. And also, there's a lot of people. There's a lot of keyboard warriors who always like to share these trendy hashtags and cancel Netflix. And then you know how difficult it is to cancel a subscription. It's not easy. It's not like press 2 buttons. A lot of people, and it's difficult on purpose. It's difficult for a reason. It's supposed to put you off. So I think a lot of people, at least half of these keyboard warriors, have not cancelled. I'm pretty sure they have not cancelled. So it was interesting movement, but I don't think this could have a massive impact. But we won't know. We won't know until the next quarter. Earnings. Songs for Space, thank you for joining. And Casey, thank you for joining. Scary thing about gold and silver is now much further it could fall. Yes, very nice upside, leveraged 30 to 40%. Yes, interesting insight. Songs for Space. Anyone buying metals dip? James, I'm tempted by silver but still watching. Seth Houston did what I said I would do, just bought more Horizon aircraft. Now that is below 275. Congratulations. We might see an upside tomorrow on the conference. We might hear some new updates, some new business updates as well. So I would not be surprised if we get some good reaction. James Vaz, get a glass and spoon to make bell sound. Yeah, it was embarrassing. I need to. Ninja Cowboy says more cowbell. Yeah, I need to give myself a little bell. Vaz, get a mini foghorn instead of a bell. Tim Netflix dump. Yes, you could see it. There was an initial overreaction. We are waiting for the earnings call, the presentation, which is 11 minutes away. Bear with me. MSK is here. Ooh, hello MSK. I was literally going to message you today, and I'm thinking I will leave it after the event. So you beat me to it. Vaz, it's my birthday tomorrow. I'll be 35. And as a present, I want free subscription to your OnlyFans. Not taking anything less. Okay, you got premium. I'll send you a link to my premium. Well, happy birthday tomorrow. Hopefully you will spend your birthday with the best broadcaster on the show with Vaz tomorrow. Well, happy birthday. Thank you. Nice to see you back. Songs for Space. Netflix has had some issues. James says Netflix is still far too high. Yeah, if you look at the yearly chart, have a look at the yearly chart. It's a massive rally. It's been a massive rally. Look at it all the way from 370 back in April. Back in October on the carry trade. Then we had April, the tariff wars, the peak of tariff wars, 590 levels or 600, and then now we've had massive rally, all-time high 1340. Wow, that's big. That's big. Yeah, there could be some sell-off. Casey says, Ninja Cowboy, did you type that in your best walking voice? Everyone is welcoming MSK. Evening, Mr. Bond. Do we have any questions or do we have any? MF says, what happened to Netflix? Well, we had some overreaction, and this could be a foreshadow of the coming market retraction, I would say. Ninja Cowboy says Netflix happened to Netflix. We are 9 minutes away. We are waiting for the stream to start. As you can see above me, we are covering the third quarter Netflix earnings call. Just going through the chat, the event, the actual video. Earnings event is starting in about 8 minutes, so stand by. I'll put it on the screen as soon as we are live. Ninja Cowboy, don't lie, Vaz. You know K-pop. I'm not saying anything, Ninja Cowboy. Okay, I'm not commenting on it. Platform 2 3/4. Reference to Harry Potter. 9 3/4. I'm not following, but okay. Martin says, Netflix is a bellwether big miss. This could be the first sign of the upcoming crash. I'm waiting to buy. Happy early birthday, MSK. It's really good. I hate to admit it, says Ricardo Vasquez. Oh, so you watched it. You watched the K-pop. Okay. Well, I might try it. Pfizer ex-dividend in 17 days, says James. James, do you want us to cover Pfizer earnings? It's dividend, isn't it? Oh, yeah, Pfizer earnings. Do you want us to cover Pfizer earnings as well? That'll be in the morning, won't it? That's always in the morning, so it'll be Sensei show. Can't believe how high and fast everything has gone. It is scary. Feels like regular people are being priced out of everything. Yeah, I agree. Songs for Space. I agree. My priority is eating too, says Ninja Cowboy. Vast the industry, says James. Tesla next to miss. What do you think of Tesla? You are saying miss tomorrow. Oh, that could be interesting. That could be interesting trigger point for the S&P 500 then. Could be interesting trigger point for the sell-off for the S&P. James says he's drinking tea. Amin Kazuli says miss for Tesla. MF, yes, Tesla will miss tomorrow. James is saying please smash, bish, bash, crack, whatever, the like button. Yeah, I love the show Wednesday. So does my family. Downside, not many others on Netflix we like, says Seth Houston. Very good. Zach is here. Thank you for joining. Cancelled Netflix a month ago. Lots of rainbow propaganda. Don't want my kids influenced by that. Thank you for your opinion. Songs for Space. Ricardo Vasquez, Beyond the Meat, just made 2K. Oh, congratulations. Thank you, Sensei, for the chat review. There you go. Songs for Space, Draft King, Pumping After Hours, Nutella HD. I love the name. Look at Beyond Meat. Well, let's have a look at Beyond Meat. The Netflix event is starting in 5 minutes. Let's have a look at Beyond Meat. The ticker is, I just lost it. What's the okay, oh, I can look it up, can't I? Beyond, am I spelling that right? Beyond Meat, BYND. Ooh, right, it keeps going up, Well, those who made money, congratulations, but I heard Sensei's guidance, perhaps not the best entry point at this moment. YRN Orbit, hope the call has some type of good news. Well, we will see. So far, we could see an update on adverts. The adverts should be more tailored to the customer, or they will be more dense. So let's see. I'm very intrigued. This is something that really puts me off. Me personally, it puts me quite off because I'm paying premium money for a platform, for a streaming platform, and I'm still getting ads. It's like Disney. They started doing ads now, and with Disney, me personally, I'll be doing my Marvel marathon over Christmas, as I do every year, unless I'll be live most of the time. But I'll be doing my Marvel marathon. I'll be doing Marvel from Captain America all the way to the end game. Then I will do Guardians of the Galaxy, and that's probably it. Yeah, I won't go beyond, but and then I'm going to cancel my subscription to Disney because it's going up. I started Disney at $6.99 2 years ago, and now I'm paying like 17 per month. And it's like a lot, and I'm still getting ads. So that's one of the reasons I'll be canceling my Disney. And Disney earnings could be quite interesting as well, because I'm not sure Disney has been doing very well with their streaming platform. So Chris Carpenter says, is Netflix a buy right now? Well, let's have a look at the poll. Philip Castle, thank you for joining, by the way, lads. Netflix does this a lot during earnings. Yes, Netflix, it's either rocket right up or it's massive crash. Always massive reaction. MSK says, thank you, Specman, Mr. Technology, Zach Zeit, Spaceman, Mr. Technology, Zach Zeit. What was I gonna do? Oh yeah, finish the Andy poll. So let's have a look. We've got 236 votes. That's good. So let's have a look what we've got in the poll. James says, Vaz, don't show on screen. Please see Discord general chat. This will help you. Well, I will have a look in a minute. Seth Houston, if not more. Yeah, we could see more. Oh, sorry. You are reacting to your previous message. Hulu is also starting to get ridiculous with ads while you pay premium prices, and they do this because they know you will still watch. Exactly. It used to be cheaper than cable, but now it's just as expensive. That's very interesting. Well, is Netflix buy, hold, or sell? We are 2 minutes away from starting the full production stream.
Playing from desktop.
The full production stream, and you can see it. We are about to start. Let me just put it on the screen in the frame. We are about to start very shortly. Just very shortly. It's very cinematic so far. I'm loving it. I'm very enjoying it. Got typical Netflix colors. The poll, what are you thinking? 39% is saying buy, 25% sell, 22% undecided, and 14% hold. Well, I will open a new poll before we finish. I will ask you a few more questions through the earnings call. Keep checking up the chat. So my first question will be, are you a Netflix subscriber? Yes, many years. Yes, recently. Next will be looking to cancel. And nope. Let's put nope, make it more fun. So there is a new poll. Are you a Netflix subscriber? Yes, for many years. Yes, recently. Looking to cancel, and nope. And we already are having some votes streaming through. Most of you are saying yes for many years. That's interesting. Well, let's have a look. Please vote, everyone. I will close this poll very shortly, and it will give us a bit of guidance on the comment sentiment as well. The event is about to start. We are eyeing it. We are not online yet, but I'm pretty sure they will start fairly on time. Let me get rid of this. Close poll. We've got. I'll check Discord for you, James, shortly. Paul Salermo says short squeeze. Short squeeze on what? Short squeeze on Netflix? Short squeeze on Netflix? I am not sure. Not on that. Did you mean Beyond Meat, or what is? Tell me what is short squeezing so we can cover it live. We can have a look. Paul Salerno, tell me what is short squeezing. Michael, I only get Disney for 1 month at Christmas. Yeah, fair enough. Casey, Hula is my first to go. They are getting ridiculous. Yeah, for people in the US on Verizon, they have some pretty affordable packages for all the streaming networks now. Talk about, Beyond the Meat. Yeah. That was. I don't think it was a short squeeze, was it? Oh yeah, it probably was. It wasn't a massive short squeeze, but those who bought, congratulations if you made any money. Okay, thank you for that, Habib and Paul Salerno. I'll be watching. I'll be eyeing. I could show you the chart, couldn't I? I'll be eyeing the charts. Netflix, slight upside. We can see maybe some short-term uptrend, but again, I would wait for the earnings call, and I would wait for tomorrow's market open as well if you want to invest. But again, this is not financial advice. Panda Pau GT says Beyond the Meat is definitely a short squeeze. Okay, I'm not going to argue with you. Right, we've got Netflix third quarter earnings call starting right now.
Joining me today are co-CEOs Ted Sarandos and Greg Peters and CFO Spence Newman. As a reminder, we will be making forward-looking statements and actual results may vary. We'll now take questions submitted by the analyst community, and we will start with our results and outlook. Our first question comes from Ben Swinburne of Morgan Stanley, who asks, as you begin to wrap up 2025 and look to 2026, can you talk broadly about the health of the business and how you would frame the opportunity ahead?
Yeah, we think the business is very healthy. We feel good about our progress on our key initiatives. We've got also a lot of opportunity ahead of us, but we got a lot of work we need to do to accomplish and fully realize those opportunities. So what's working? We had a good Q3. We had revenue in line with expectations. Our operating income would have exceeded our forecast absent the Brazilian tax matter. We're also seeing good progress against our key priorities. So engagement remains healthy. We achieved record share of TV time in Q3 in both the US and the UK. We recorded our best ad sales quarter ever. We're now on track to more than double ad revenue this year. We're continuing to build out both live offerings and games, these emerging capabilities. On the live side, we saw Canelo Crawford. That was the most viewed men's championship fight this century. We recently announced the ability to play Netflix games on TV with friends and family playing together at home using just that TV and the phone as the game controller. So this progress in these areas is indicative of how we think we can best compete and grow the business over the long term. We focus on a few key areas that we think matter the most, and then we work hard to deliver continuous improvement in those areas. It sounds super simple, but building a real at-scale global streaming business is hard because you got to combine great tech product and great content from all around the world, and we believe we can continue to improve in both those areas. But Ted, maybe you want to comment on
Yeah, I would just
potential
say, looking ahead, we continue to have a massive opportunity since we're only about 7% of the addressable market in terms of consumer spending and only about 10% of time spent on TV in our biggest market. So enormous room for profitable growth in the core business. And this is a very exciting time in terms of a lot of innovation, a lot of competition, but that's been true for the last 25 years. And one thing as a company, we've always embraced change. We thrive on competition. It pushes us to improve the service even faster for our members. Back at the beginning in the early DVD days even, and now in streaming and global streaming of original content, we compete with the biggest players in the world, tech and media. And as you see, we keep growing engagement, revenue, and profit. So, today we're an entertainment company. We program for an audience that's approaching 1 billion people around the world. We're producing series and films for local audiences in multiple markets. Many of those films and series resonate around the world. And a really great example of that, I think, is this summer's K-pop Demon Hunters. Obviously a smash hit, but it's also emblematic of exactly what we're trying to do every day. In fact, feature animation is an example of that continuously improving the core. We've been grinding away at original feature animation for a few years now, and K-pop Demon Hunters is our most popular film ever. And it proves our ability to create breakthrough hits and move the culture. Today, we announced Mattel and Hasbro have been named the global co-master toy licensees for K-pop Demon Hunter. This is a rare, maybe unprecedented partnership for them, and we're going to need them both to help meet the massive demand for fans to get closer to their characters off screen every day. We're here to entertain the world, and we're delivering tremendous value to our members every day. When you have a hit the size of K-pop Demon Hunters, it stirs the imagination of how big we could take this. And as long as we keep improving on the core business every day. So we feel great about the business. And as Greg said, we are as energized as ever.
Thank you, Ted and Greg. Our next question comes from Steve Cahill of Wells Fargo. Can you please provide more color on the nature of the tax expense and why it fell above the operating line?
Sure, Spencer, I'll take that one. Greg and Ted were on a roll, but I think I will take the short straw for this one. And I'll spend a minute on it because this Brazilian tax matter, it's a bit complicated, and I want to be sure we're being really clear about what it is and what it isn't. It's not an income tax. It's a cost of doing business in Brazil. It's a gross tax on outbound payments, and it's called the Contribution for Intervention in Economic Domain. So it's a bit of a mouthful. It involves a 10% tax on certain payments made by Brazilian entities to companies outside of Brazil. It's not a tax that's specific to Netflix. It's not even specific to streaming. So we assume other companies will be impacted by this. In our case, Netflix Brazil pays Netflix US for services that enable Netflix Brazil to offer subscriptions to our Brazilian customers. And we actually received a favorable ruling from a lower court back in 2022 that concluded we were not subject to this tax, which is why we believe we couldn't accrue this previously. The legal issue in question relates to the scope of the transactions covered by the tax, and in particular, whether the tax applies to service payments that don't involve a transfer of technology. We flagged this as a potential exposure in our prior 10Ks and 10Qs dating back to our 2023 10K. And then in August of this year, the Brazil Supreme Court reached a 7-4 decision against an unrelated company, ruling that the tax applies to a wider range of transactions than we thought was legally permissible. In particular, that it applies even to service payments that don't involve a transfer of technology. So given that court's ruling, that's caused us to reevaluate the likelihood of prevailing, and we now deem the loss to be probable. And that's why we recorded the expense in Q3. And again, it's not an income tax, and that's why we recorded the expense as a component of our cost of revenues. And as we said in the letter, the expense we booked in this quarter, it covers the periods from 2022 through Q3 of 2025. Of the amount we booked in cost of revenues this quarter, just about 20% of it is for the year 2025, with the remainder related to those 2022 to 2024 periods. So look, I know that was a lot. There's just two really important takeaways that I want to leave you with. The first is that the contribution for intervention in economic domain, it's a unique tax. It is a mouthful. No other tax looks or behaves like this in any other major country in which we operate. And secondly, absent this expense, we would have exceeded our Q3 25 operating income and operating margin forecast, and we don't expect this matter to have a material impact on our results going forward.
Great, thanks, Spence. I'll move on to the next question, which comes from Tom Champion of Piper Sandler. Do you have any early views on revenue and operating income growth for 2026?
I'll take this one as
Jump
well.
in there,
Yeah. Okay. So we'll issue a full year 2026 guidance on our next call in January, but our financial objectives are unchanged. We look to sustain healthy revenue growth, look to expand margins, and increase free cash flow. Now, we did last year on our Q3 call, we did issue full year guidance, but that was in advance of sunsetting membership reporting. So it was a pretty unique timing given that upcoming change in reporting. For 26, again, we'll issue the full year 26 guide as we more typically would on our next call in January.
Thanks, Spence. I'll move us along to a few questions we've received on the topic of advertising. The first one comes from Jason Helfstein of Oppenheimer. Given your comment of doubling upfront commitments in the earnings letter, should we interpret this to mean that full year 2026 advertising could also double?
I'll start by just saying it's exciting to see our progress in 2025, more than doubling our ads revenue there. While, of course, it's still off a small base relative to the size of our subscription revenue. But we feel like we've established the fundamentals of the business now. We've proven we know how to scale. We see plenty of room for growth ahead. And what's making up that growth right now, as you mentioned, we more than doubled our US upfront commitments. That lands partly in 25 and partly in 26, which I think you're alluding to here. Perhaps even more importantly, though, we're seeing even higher rates of growth in programmatic. And that's more important because we believe that's going to be an increasing part of that incremental revenue contribution going forward. What are driving those results? Advertisers are excited about our growing scale. We got a highly attentive and engaged audience. The rollout of our ad tech stack means we got more formats, we got more measurement, we got more ways to buy. And of course, our slate is a critical and important source of competitive differentiation. So while I'll refrain from offering any 2026 guidance, I would say we are feeling good about our growth trajectory.
Thanks, Greg. A follow-up on that one from Vikram Kesavabotla of Baird. Your offering to advertisers has evolved significantly in 2025, including the launch of the ad suite and the integrations with additional demand sources. As we look into next year, what are some of the key priorities for the advertising business?
Yeah, consistent with the last comment and answer, we made considerable progress in building out our general capabilities in the ad space. So if you use our beloved crawl, walk, run model, we're now squarely in that walking phase. The rollout of the ads suite, our own ad suite, has been great because it means we're just continuing to learn and improve the stack based on client feedback. So we've got a really fast iteration loop going there that we're excited about. Key priorities and focus for us is making it easier for advertisers to buy on our service. We want to increase the diversity of advertisers we have. That's a key direction of growth for us that enables that revenue growth. We're adding more demand sources like Amazon DSP, AJA in Japan. We're improving our own ad sales and go-to-market capabilities. We're also iterating on ad formats. Later this quarter, we'll be introducing ad interactivity. And taking that into 2026, you're going to see us continue to develop along some of those lines. So more ways to buy, more data for targeting and media planning capabilities globally, more modular interactive ad formats with enhanced AI capabilities, and more measurement functionality in all of our markets. And then in 2027, we get to pivot to make more focused investments in data capabilities such as ML-based optimization, advanced measurement, advanced targeting. So I would say, we've got our legs underneath us. We're making a good pace, but we've got a lot ahead of us to go do. And quite frankly, we expect we're going to be able to move more quickly than other streamers as we leverage pre-existing tech and data science assets and expertise.
Thanks, Greg. And to round out our last question on advertising, this one comes from Dan Salmon of New Street Research. Are fill rates improving in line with your expectations as the Netflix ad suite and new demand partnerships scale up?
Now, we focus on overall revenue as the most important metric we're seeking to optimize. But having said that, fill rates have improved, and we believe they're going to continue to improve as we continue to develop our go-to-market capabilities, more measurement, more targeting.
Thanks, Greg. I'll now move us along to the topic of content and engagement. A lot of questions there. We'll begin first with Steve Cahall of Wells Fargo. Are you seeing a pickup in engagement like you've expected?
Yes, total view hours grew a bit faster in Q3 25 than in the first half of 25. In fact, in Q3, we achieved our highest quarterly view share ever in the United States at 8.6%, and in the UK at 9.4%, according to Nielsen and Barb, respectively. These are just, two countries that we've got really good measurement on that share. We also believe we're going to continue to see steady growth in view hours over time. We grow engagement by expanding our programming and the range of our offering. This is a critical and very proven dimension of growth for us. But we're also seeing that certain engagement delivers outsized and different value. And we saw pretty good examples of this in Q3. You got the Canelo Crawford fight, most viewed men's championship boxing match this century. You got K-pop Demon Hunters, our biggest film ever, huge impact on the cultural zeitgeist. Both are great examples, and they're also from really different parts of our programming spectrum of this punctuated value. Now, we believe we've got a better understanding of the streaming business than any of our competitors, but we're also continuing to learn, and we're in the process of really building a better understanding of how these particular moments deliver differential value to our members and the business.
Yeah, I mean, just to add here, Steve, we're going to continue to benefit long-term from the trend just of folks moving from linear viewing to streaming. That has a kind of a natural adoption curve. But I also look for, and we have an incredible slate in Q4, and we're really excited to follow that up in 2026. But it's not about any one single title in Q4 or next year. As you know, even our largest titles and the biggest success generally drives less than 1% of our total viewing. So it's really about having a steady drumbeat of shows and films that our members love. That's what drives continued steady growth and engagement over time. And we gave a lot of detail about our Q4 coming up in the letter, including an incredible slate of film and the wild ride finale of Stranger Things. But I wanted to give you a little bit of color in 26. Maybe this is a longer answer than you were bargaining for, Steve. But we're really particularly excited about a few things that coming up next year, like the return of some of our biggest and most loved shows like Bridgerton, Beef, Emily in Paris, One Piece, Outer Banks, Virgin River, The Gentleman, Avatar: The Last Airbender, Running Point, Ginny and Georgia, Lupin, all coming back for new seasons in 26. We've got an amazing slate of films with a big event film from Greta Gerwig with Narnia. Here Comes the Flood, starring Denzel Washington. Ben Affleck is directing this great movie for us called Animals. Apex from Charlize Theron, an incredible action movie. Matt Damon and Ben Affleck are on screen together and starring in The Rip. A couple of great rom-coms, Office Romance with Jennifer Lopez, People We Meet on Vacation. Our French team has got an incredible epic film, Quasimodo, coming up. And Peaky Blinders fans are going to freak out for the Peaky Blinders movie, The Immortal Man, with Cillian Murphy. It's really great. And lots and lots of brand new series work going on this year and coming out in 26. Golf with Will Ferrell, Little House on the Prairie, Man on Fire. We have new series from the Duffer Brothers, amazing slate of K-dramas. That's just to name a few. But in other words, we've got a pretty great 26 coming up after this pretty phenomenal Q4.
We've got a new
Thanks,
poll
Ken.
in the chat. Go there
Dan
and vote,
DeCarlos,
please.
From Benchmark Company has a question about our Spotify partnership. How should we think about the recent deal with Spotify? How aggressively will you build out this podcast category?
So this deal is a video co-exclusive partnership with Spotify that secures a curated selection of their top podcasts to help us provide even more entertainment options for our members when they're looking for pop culture or lifestyle or sports or true crime. And we get to deliver to them wherever and however they want to watch. And we're going to build into this category like we do with our other categories based on demand signals that we get from our members. And we see this as really, the opportunity to integrate high quality video podcasts that broadens the Netflix offering beyond all the incredible films and series that Ted just mentioned, beyond the live events that we are building, stand-up specials and games. And we hope that, that ultimately reinforces our value as the most important service for your entertainment needs.
Thanks, Greg. Our next question comes from Robert Fishman of MoffettNathanson. Following the strong theatrical performance of K-pop Demon Hunters, can you share your updated perspective on monetizing some of your content in the theatrical window on an exclusive or non-exclusive basis?
Well, first of all, thanks, Robert. There's no change in the strategy. Our strategy is to give our members exclusive first-run movies on Netflix. We occasionally release certain films in theaters for our fans, like we did with K-pop Demon Hunters, or as part of our launch strategy, publicity, marketing, qualification, all those things, and we'll continue to do that. We believe that this film, K-pop Demon Hunters, actually worked because it was released on Netflix first. Look, we had a film that people fell in love with. That's first and foremost. But not in a huge way on the first day or even the first weekend. In fact, it was the super fans who watched the movie and repeat watched the movie that drove the recommendation engine, that got it in front of more super fans who also fell in love with the movie. So that ease and value that allowed folks to repeat view it, the ubiquity of distribution, which took all the guesswork out of how to watch it when you did finally see it show up in your social media feed. All of this contributed to K-pop Demon Hunters blowing up all over the world. And I would argue in a way that it couldn't happen anywhere else. If anything, this actually reinforces our strategy because being on Netflix gave the film a chance to build momentum. And it allowed fans to learn the songs and to watch it over and over again and to make their own posts and their own dances around K-pop Demon Hunter. Now, for some films, seeing it together and singing out loud is super fun, and it's a differentiated experience. And we were able to do that with the K-pop Demon Hunter sing-alongs 8 weeks after the film premiered on Netflix. And we did have a good weekend. But we created a great night out, and we're going to do it again on Halloween weekend. And this time, every major theater chain is on for the ride. We're also adding a few international markets. So it's been really fun to see this film and to see our ability to break through pop culture on par with some of the biggest theatrical films ever. And it's even better that it's with an original animated feature because it's so hard to do.
Great. We now have a question on our live events from Vikram Kesavabotla of Baird. What were your observations from the Canelo versus Crawford fight in September? How are these types of live events impacting engagement, acquisition, and retention on the platform?
Yeah, well, like Greg said earlier, that the Canelo Crawford fight, it was the most viewed men's championship fight of the century. Had over 41 million live plus one viewers. It was in the top 10 in 91 countries. And it was a great fight. So we believe these big events that attract mass audiences are kind of differentially valuable for our members. It's a kind of urgent viewing that our members love and value. So these events typically have outsized positives for conversation and for acquisition, and we strongly suspect retention. However, we've said earlier, live is only a small portion of our content spend, and it's a very small portion of our 200 billion hours viewed. So it's it's relatively small still, but hugely outsized impact. And we like we've seen with other titles, this has had that kind of positive impact on acquisition. It's a little too early to say for sure on retention, but so far it looks a lot like the Jake Paul Mike Tyson performance. And we remain incredibly excited about the opportunity in live. So, upcoming, we've got Jake Paul versus Tank Davis from Miami, November 14th. And we really are trying to grow our capabilities outside of the U.S. as well, which you'll see next year with the World Baseball Classic from Japan.
Thanks, Ted. And that's a good segue to our next question, which is the quarterly question about sports for us. This is from Robert Fishman of MoffettNathanson. Since last earnings, we've seen several sports rights deals, including Apple F1, Paramount UFC, et cetera, while we still await an official MLB update. Can you help us think about the importance of global sports rights versus local rights to Netflix? And do the sports rights you look to acquire need to materially accelerate your advertising growth?
So as for local versus global, it's just a scale question, local cost versus the size of the local audience. So and no real change in the approach. We're focused on big live events, which sports are a subcomponent of the live strategy. We said before, we're not currently focused on the big season packages. In terms of global versus local, also, we think about it just like series. It varies. Some, like the Canelo Crawford fight, had big global appeal. We think World Baseball Classic in Japan was actually built and designed and budgeted for a specific geography. As far as advertising is concerned, the number one important thing we have to do is thrill our audiences. The revenue from advertising or subscription is the reward for thrilling the audience. So we have to stay disciplined on that approach. But for upcoming live events that we're excited about, I mentioned Jake Paul versus Tank. That's November 14th. We have our doubleheader NFL Christmas Day games with Dallas versus Washington, Detroit versus Minnesota. Skyscraper Live is going to be wild. The SAG Awards, we've got WWE every week. I mentioned the World Baseball Classic in Japan in 2026. And in 2027 and 31, we've got FIFA's Women's World Cup as well. So we're pretty excited about the slate, and there's going to be a lot more that'll come in between.
Thanks, Ted. We'll take our next question from Rich Greenfield of Lightshed Partners. Are you testing premium tier free trials? We meaning Rich, recently opened Netflix and were prompted with a 4K upgrade screen. Is this a typical promotion, or are you selectively testing free trials?
Yes, we test and productize a variety of offers that we think help members understand and sometimes try a feature or benefit that we think they might enjoy. So if you got a 4K TV, as Rich does, you might get a notice from us and say, do you want to try watching, let's say, Skyscraper Live that Ted mentioned, somebody free climbing Taipei 101 in 4K, and decide if that's a good option for you. But ultimately, we want a range of plans, we want a range of features, different price points, and then we want to help members choose the right plan for themselves. We think that yields a better member satisfaction, it yields better engagement and retention, and a better long-term business.
Thanks, Greg. We've gotten a series of questions on M&A on that topic today, not surprising given the announcement from our friends at Warner Brothers Discovery. So we'll take this next question from Jessica Reif-Ehrlich of Bank of America. Do you see potential industry consolidation reshaping the competitive landscape? Do you see that as an opportunity or threat? What implications might that have for Netflix's content strategy and differentiation?
Thanks, Jessica. Look, we'll take it in two parts. First, the opportunity. It's true that historically we've been more builders than buyers, and we think we have plenty of runway for growth without fundamentally changing that playbook. Nothing is a must-have for us to meet the goals that we have for the business. But as we wrote in the letter, we focus on profitable growth and reinvesting in our business, both organically and through selective M&A. And when it comes to M&A opportunities, we look at them, and we look at all of them, and we apply the same framework and lens that we look at when we look to invest in a build. Is it a big opportunity? First question. Second, if it's IP, does it strengthen our entertainment offering? Is there additional value in ownership? Does it strengthen our existing capabilities somehow? Does it accelerate our existing strategy? By the way, and you look at all these things relative to the price, relative to the opportunity cost, and relative to other alternatives. We've been very clear in the past that we have no interest in owning legacy media networks, so there's no change there. But in general, we believe that we can be and we will be choosy. We have a great business. We're predominantly focused on growing organically, investing aggressively and responsibly into the growth, and returning excess cash flow to shareholders through our share repurchase. Greg, you want to add there on?
Yeah, maybe I'll try and speak to that second part of this, the threat part of the question. You know, we've always faced significant competition. We still face it today. This is, an incredibly competitive entertainment environment. We've also seen a lot of industry consolidation over the years. Think about Disney, Fox, and Amazon picking up MGM. Of course, Time Warner and AT&T, and then Discovery and Warner. But, none of those mergers were a fundamental shift in the competitive landscape. And we have seen also a wide range of outcomes from such mergers. So watching some of our competitors potentially get bigger via M&A does not change, in and of itself at least, our view on the competitive landscape. And we don't think it changes the substance of the challenge that our competitors face. Specifically, the range of activities that we and our competitors have to get great at has never been assembled in a single company before. Think about, producing film and TV shows across multiple genres and multiple languages in dozens of countries around the world. Trying to figure out how to incorporate the latest technology, including, AI and Gen AI. We're trying to figure out how we build, better product experiences that conserve consumers better around the world. How about customer acquisition and retention? How do we optimize global payments? How do we optimize global partnerships? There is so much. And we want to get better at all those things. Our competitors are seeking to get better at all those things, of course, as well. But you have to do that by the hard work of developing those capabilities in the trenches day to
100%.
day. You don't get there simply by buying another company that is also still developing those same capabilities. So maybe I'll just end by reiterating what Ted said, which is it's our responsibility to look at every significant opportunity. We do that. We've got a clear framework to evaluate those opportunities, and we'll do whatever we think is best to grow the business.
Great. Thank you. David Joyce from Seaport Research Partners has a slightly different angle on the M&A question. Should potential industry consolidation with embedded studio and streaming assets, could that lead to less third-party content accessibility for Netflix?
Thanks, David. Look, original titles are the big business driver for us. That's why we got into this, more than 10 years ago. And it's why we continue to grow and expand the original content investment across new genres, new content forms, and multiple geographies. So we're happy to license titles from industry suppliers to complement our offering. But it's worth noting that we've always seen these kind of ebbs and flows from third-party content in terms of access to it. Our competitors are also our suppliers, so they change their minds sometimes about selling to competitors. So we've been dealing with that since the beginning of streaming. But as we sit here today, we're not dependent on any single supplier. No single supplier represents more than a small minority of our total view hours. And more importantly, I think, is that we've proven time and time again that licensing to Netflix is the best way to build audience, build revenue, and create value for your IP. Whether it's Suits or Peaky Blinders or Breaking Bad, we played a very positive role in the life cycle of other folks' IP, and we suspect that dynamic will continue.
Great. We now have a question from Justin Patterson of KeyBank. Netflix recently launched party games that are playable on the TV. How do you think gaming could change the time members spend with Netflix each day?
Well, games are clearly a form of entertainment that consumers care about, and in terms of the time they spend, which you noted, as well as the money they spend. It's approximately $140 billion opportunity consumer spend, ex-China, ex-Russia. That doesn't even include the ad revenue, which of course is linked to the time and engagement. We've mostly talked so far about our work in this space as games, because that's an easy shorthand. But we see this initiative as more about interactivity broadly, and how does interactivity become complementary to linear storytelling? How does it able to unlock whole new entertainment experiences? For example, real-time voting will be our first live interactive feature. We're currently testing it on Dinner Time Live with David Chang. It's going to roll out more broadly, starting with Star Search in January. And we expect to provide other interactive features to deepen engagement with live events as we go in the future. And then when it comes to actual games, we've been building a ton of foundations for the last few years. Things like the ability just to develop games, to get those games onto service, connect games with players, give them a high quality experience. And going forward, we're building on top of that foundation, but focusing on offering more high quality games in a few key genres and targeting the right cohort of users. So this is a less is more strategy on a few identified verticals. Those verticals include immersive narrative games based on our own IP. You can think about Squid Game Unleashed, or Thronglets from the Black Mirror universe, or Golf with Happy Gilmore. We've got games for kids. This is Peppa Pig, no ads, no in-app payments, safe within your subscription. Mainstream established titles, think about what we did with Grand Theft Auto, as well as socially engaging party games, which you noted. We're rolling out this holiday season a slate of party games on TV. It's great for the whole family. When you're in front of that TV, all you need is the TV and your phone as a controller. It's like Boggle Party, Pictionary Game Night, Lego Party, Tetris. We've got Party Crashers, which is a social deception game. And the part that I like most about this is these games are super easy to access. It's just like our series and films. You scroll to the games tab, you pick whatever you want, click it, and you're in. You don't need a special controller. That's key to this access. And in the years ahead, actually, speaking of controllers, we expect creators will really find interesting and novel ways to unlock all of the power that is in this incredibly advanced controller that we all happen to have in our pockets, which of course is our phones. So we're just starting to scratch the surface today. We think there's much more we can ultimately do in this space. Yet we already see how this approach not only extends the audience's engagement with the story, but it creates a synergy that reinforces both mediums, the interactive and the non-interactive side. It drives engagement, it drives retention, and therefore supports the business. So looking ahead, we're going to ramp our investment in this area judiciously based on demonstrating that we're ramping returns to the business, but we're extremely excited about, the progress we've got ahead of us.
I would say do not play boggle with Greg. He's very, very good.
That was
Not as good
clearly
as our head of the games unit, but he's good.
He has a leg up on us. He's very good.
He does. I think he gets to play it quite often.
All right, we have another question from Steve Cahall of Wells Fargo. Last quarter, you talked about Netflix being a great place for some creators on YouTube. Since then, you've announced one new creator deal with Mark Rober. Should we expect more on this front, and what kinds of content are you looking for?
Yeah, thanks, Steve. I said before, but we want to be in business with the best creators on the planet, wherever they are. And some of them are in Hollywood, some of them are in Korea, some of them are in Paris, and some of them are sitting on social media platforms and have yet to be discovered. So not everything on YouTube is a fit for us, but there are some creators like Mark Rober, like Miss Rachel, that are great fits for us. And remember, working with content creators from other platforms isn't a recent thing for us. Folks remember over the years, we made Hype House. We partnered with Miranda Sings. She had a stand-up comedy special and a series called Haters Back Off. King Bach, who's a big star on social media. You can see him in a lot of our films, Babysitter of Killer Queen, When We First Met, just to name a few. But now we also have created a curated select section of video podcasts as well. So some of this stuff is just a very natural expansion, and there's plenty of room for the world's best creators wherever they are.
Great. We'll now wrap up with our last topic, which is Gen AI, and two sort of questions, or maybe a two-part question. The first part comes from Doug Anmuth of JP Morgan, who's asking, how has your thinking evolved over the past couple of years about Netflix's ability to leverage AI? And related, John Hudlick at UBS asks, what are your thoughts on the impact from Sora 2 and other new AI content creation apps in terms of increased competition from short form video? Do you think it creates new competition from an engagement standpoint?
Perhaps I'll kick it off in the first part of that question. And our thinking about AI hasn't really changed over a decade and a half more. We've had a long history of developing ML and AI solutions. We've got, a deep DNA, technology DNA. We've got significant data assets. We've got scaled consumer products, scaled business processes. All of that we think enables us to have the opportunity to leverage new technical capabilities as they come online. And that's our job. We're engaging proactively to do so. As we said in the letter, specifically with Gen AI, we see a huge number of places in the business where we can bring these technologies in. They provide more capable tools. They improve productivity. They improve velocity of innovation. They deliver better results for members, for creators, for partners. The vast majority of those cases involve us going to market for solutions and just integrating them into our existing tools and products. But there are a few spaces where we think that making targeted investments is important. We think we can develop, often using building blocks from others. So think about this as foundational models that we get open source or commercially, to make cutting edge tools and cutting edge experiences. And those targeted areas of investment are better product experiences, content production, and advertising. And maybe Ted, you want to pick it up on the content creation apps part of the question?
Yeah, look, what we've seen so far from these content creation apps is that it's likely to have a lot more impact on UGC creators the most in the near term. In other words, AI content replacing viewing of existing user-generated content. That starts to make sense. But for what we do, it takes a great artist to make something great. Writing and making shows and films well is a rare commodity, and it's only done successfully by very few people. So AI can give creatives better tools to enhance their overall TV movie experience for our members, but it doesn't automatically make you a great storyteller if you're not. So if music is a leading indicator of all this, AI generated music has been around for a long time, and there's a lot of it. And it's a pretty small part of total listening. And established artists like Taylor Swift continue to be more popular than ever. So even in a world filled with AI music, AI seems to be mostly a tool for musicians to take their sound in new directions. And so we're confident that AI is going to help us and help our creative partners tell stories better, faster, and in new ways. We're all in on that. But we're not chasing novelty for novelty's sake here. And we're investing in what we believe delivers value for creators and members alike. So we're not worried about AI replacing creativity, but we're very excited about AI creating tools to help creativity.
Great. Thank you all for your questions. So we're now out of time. So we thank you for joining us for our Q3 call, and we look forward to speaking with you all next quarter. Thank you.
That was interesting. It was certainly interesting. So what do you think of that? What do you think of that? I'm both. I'm surprised, and I see both. I see some positive news, and I can see why the reaction on the chat was negative as well. So let me know in the chat, what do you think? I will carry on with you for another 5-10 minutes so we can go through the chat, and we will wrap it up. We will wrap up this Martyn Lucas Investor Monday Marathon happening on Tuesday. We will wrap it up and get ready for another one tomorrow. Right, so who we've got in the chat? Well, first of all, we had a couple of polls. So Netflix, buy, hold, or sell. Buy 39%, sell 25%, undecided 22%, hold 14%. Yes, we had short squeeze on Beyond the Meat. Panda Pow, I sold. Donut, was that Krispy Kreme? Earlier today at 337, regret it deeply now, bought back at 322, still a nice profit. Yes, you made money, good. Anointed Flowers is here, thank you for joining. Jamie Rees, you are making me hungry. Panda Pow, YR and Orbit, bought a call, 1185, should still be in profit tomorrow. Congratulations if you make some money. Right, Netflix subscribers, first poll. Are you a Netflix subscriber? Yes, for many years, 63%. No subscribers, 30%. Recently, 4%. And looking to cancel, 3%. That's a good specimen in there. Very interesting to hear from you. Thank you for joining this poll. Jamie Rees, that was a hard poll to answer. Why was it hard? Oh, you mean the new one? The YouTube, Netflix, Amazon Prime and Disney platform. Okay. James, good evening. Anointed Flowers. Greg, say ad supported. Greg says, I have an event contract bet that needs them to say ad supported. Well, I'm sorry, it didn't win. Why can you bet? Why can you make such a bet? That's quite interesting. That's quite interesting. Why can you make such a bet? Is it like custom bet, or was it somebody proposed this and offered? That's interesting. Happy Me Fly. Did they talk about the tax impact? Yes, they talked about Brazil in the very beginning. If that's what you're asking about. Panda Pow GT, is Netflix a buy right now? It's almost back to support at -7. Well, let's have a look at it. I wouldn't be surprised if we touch this bottom again, and probably, depending on obviously on the macro tomorrow, but I wouldn't be surprised if it sells off. That's why I've been telling you, don't buy it. You missed the bottom. You could have made nice little trade. Sometimes if you are lucky and if you are quick, you can make nice little 3%. You could have made easily 3% today on the earnings. It usually happens when we have overreaction. You can buy quickly in. It usually bounces back, consolidates, and you can make 2-3% on the day. Usually, it's not financial advice. It doesn't work out all the time. So, but sometimes it works out well. This was the case. We know that earnings call with Netflix is always very reactive, very strong reaction. So this is proof again. What was it? Was it 7% down? what was the crash? Yeah, 7.5% down, and now we are 7% flat. So that is interesting reaction. Let's see tomorrow. Do we have? It was Kalshi, not a good one this time. Sorry for your loss, Greg. Thank you for joining anyway. Thank you everyone for joining. It was interesting event. I was very keen to listen about their new product. I was keen to listen on the I was very keen to hear. I got a message from Sensei, from the team. I was keen to listen about their new product. I need to check the games. I've never heard of it. I need to check it out. It looks quite interesting. Is it interesting? I'll find out and I will let you know on the next show. If we don't have any more questions, I will close this poll. What is your favorite streaming platform? Well, we've got 56%. It's not coming through yet. We've got 59% YouTube, 30% Netflix, 6% Amazon Prime, and Disney last with 5%. Interesting. I'm glad YouTube is your favorite platform because that's why everyone is here today. Right, I will wrap it up tomorrow morning, couple of hours before the market open with Sensei's newsletter, Sensei's breakfast show or market forecast. With me in the afternoon for Horizon Aircraft Planet Microcap conference in Toronto. You will hear Brandon Robinson, the CEO, talking about Horizon Aircraft. No doubt we will hear some interesting business updates. Later, I'll be covering the Tesla earnings, and we are already covering, which one is it? I forgot which one that is. We already have locked in, was it O'Reilly Automotive? We did one last quarter and we had good reaction on it. So this could be very interesting. So we have O'Reilly Automotive as Tesla in the air. Are we doing Tesla? Are we not? Well, it's only down to you. Right. I will see you tomorrow. That's it from me. Thank you for joining again. It was a great day. Congratulations, Sensei. You did a good job. That's it from me. Take care of yourselves and each other.